Good afternoon, this is Rich Nelson with Allendale. Coming to wrap up commodity comments here. This is Thursday, January 5th of 2012 here. Of course, the outside markets did run the show here today. The fact that the U.S. dollar last trade up 82 points here for the day. This is actually the highest U.S. dollar price since January 7th. And for those of you who've been watching our commentaries and watching our research, we certainly are very adamant about pointing out these relationships between the U.S. dollar and grains and all these very strong relationships, which are continuing here right now as well. Keep in mind, back in earlier this year, I say mid-part of 2011, that bottom in the dollar, about mid-part 2011 here, coincided very closely here with the high in corn this past summer here. So as far as the general trade, general mindset, we do have this idea that a higher dollar is a little bearish here for other commodities. As to why we have this higher dollar, well, honestly, things are doing much better in the U.S. economy than people were expecting just a couple weeks ago, or in fact even a month ago. So not only did we have holiday retail sales do very well this year compared to expectations, we also have, as of yesterday, good data on U.S. automaker sales during the month of November. So most of these guys are wrapping up 2011 on a very good note. So we had that for this automakers. Also this morning, the weekly employment claims numbers came in a little better, just a little better than expected here. But really, we have some burgeoning hopes to see tomorrow's employment report, as far as U.S. employment for the month of December, to show some good gains. In fact, the trade is even talking about being surprised now at some of the potential gains which could happen here. So bottom line right now is we have resurging confidence here in the U.S. economy compared to Europe and compared to other groups. So that is certainly a big issue we got to point out here. So at the same time as we had this bearish influence on commodities from outside factors, we also have these issues here that we're still dealing with on the grain side. The fact that the Argentine forecast did add a little rain on the midday report yesterday. It carried through on the morning report today, and that rain is still holding as of the midday model updates as of today. So we do have this slightly larger amount of rain being a negative factor for us right now. Corn down 16, beans down 21.5, and wheat down 22.5. Key thing we've got to point out here also on the charts is we did fill those gaps that we talked about on the morning movers report here that we put out. So we filled that gaps, and at the exact same time, we did not rebound. In fact, we closed below the gap. As far as a chart standpoint, and technically speaking, that's a negative influence. The move after the gap is filled is equally important as the move trying to get that done. So we do have some negative issues which lead us into tomorrow as well here. Over on livestock, we've got to point out interesting news here on the cattle side. So while we do have this resurging U.S. economy, hopes for maybe beef demand to start showing some strength here pretty soon, it's interesting to see that so far that has not changed, or that has not corresponded with any higher beef prices. In fact, the midday beef report today was a surprisingly $2.25 decline for choice and 3 cents lower for select. So while we have this U.S. economy supposedly back on track, it's interesting to see that beef demand is not resurging with that type of renewed hope. So we did see cattle down about 67 cents here today. Over on the hogs, down 32 cents there for the Feb contract. Key issues there, number one is corn. As we point out in this morning's commentary, we do have a very strong relationships between corn and hog prices, as much of this hog industry is on the edge of expansion right now, given these very strong profits that are implied for 2012. So we did see the hogs down $1.32. Corn being main issue here. Of secondary issues, we've got to point out maybe some people aren't wholly convinced on this cash hog and cash pork bottom idea. We are ourselves, but we must note that the trade still has some skepticism here. So overall, a little rough day here for us to speak of, and certainly these issues we're talking about in today's commentary will be brought over and expanded on much more in depth at the January 20th and 21st Outlook conference here. This conference we call the Ag Leaders Conference. We'll have a special section devoted to the economy. So you'll see not only Allendale's outlooks for corn, soybeans, wheat, cattle, and hogs, you're also going to see us discuss some of these issues on the economy as well, and how these will relate into commodity pricing, also meaning grains, for 2012. So we're going to discuss all these issues at this conference, and we're actually getting quite a few signups right now. So we strongly encourage you guys to get this space lined up for yourself, for the conference, and also get your hotel lined up. And both those can be done by giving us a call here at 1-800-262-7538. This is Rich Nelson with Allendale. Hope you have a good trading day and a good trading week.